Lance Roberts here with 3 minutes on markets and money, talking a little bit about today's bounce in the markets. In this weekend's newsletter, the Real Investment Report, on the website now at realinvestmentadvice.com, is this idea that we are likely to get a short-term bounce in the markets because, simply because over the last few days we got very oversold. The market did sell off back to the 50-day moving average. Good news is on Friday actually held that support at the 50-day moving average. Now, again, with markets oversold on a short-term basis, it's likely that we're going to see a bit of a bounce here. Now, we talked about this specifically in the newsletter, that when you look at daily charts, we are very oversold, likely to get a bounce. On longer-term charts, weekly and monthly, we're still very overbought, still in a corrective process. So most likely, this bounce here is something that is an opportunity to sell into, reduce risk, rebalance portfolios, take advantage of that, particularly if this sell-off last week kind of caught you by surprise. The virus is not yet over with, and that's the one thing that's really kind of driving fears in the markets. The Chinese markets yesterday sold off about 7%. China is stepping in with a lot of liquidity. Hopes are the Federal Reserve will follow suit, provide more liquidity for the markets, maybe extend their not QE past April. That while that is likely, that suggests that there's bigger problems going on with the markets as well. So again, kind of pay attention to this. The news isn't always that good, but in particular here, a break of the 50-day moving average is going to set up the markets to retest some of the lows back towards the 200-day moving average. So again, there is risk to the market to a downside break of up to 10%, not the end of the world, and would be an opportunity to potentially get some more money put to work. February itself tends to be a weak month of the year anyway. What's interesting, of course, is that the market is playing out a lot like we saw in January of 2018. January of 2018, a big surge in the markets. Then the trade war was launched right at the end of January, led to about a 20% sell-off very quickly into mid-February. The markets are kind of acting very similar to what we saw then. And so again, a bit of a bounce here, not surprising, probably an opportunity to sell into. There's still risk to the markets, particularly as the virus continues to spread. However, if there's good news on the virus, that will help stem some of the concerns of the markets in the short term. So again, kind of pay attention to your money here. There is risk to the downside until the virus becomes contained, at least to some degree. The contagion and the spread of the virus is more rapid than SARS, and we're likely to see a pickup in the death rate of the coronavirus here over the next month or so. So again, kind of pay attention to this. We're not out of the woods yet. The market is still overbought on a longer term basis, and so a continued correction is likely. That's 3 minutes on markets and money today. I'm your host, Lance Roberts. Get by the website. Our latest newsletter is out talking specifically about this and how to position your portfolios. realinvestmentadvice.com. Just click on the newsletter link. It's there for you. And if you subscribe, we'll email it to you every single week. I'm Lance Roberts. We'll see you next time on 3 Minutes and Markets and Money.